Hello and welcome to the Reorg, where we dive into the Satoshi Nakamoto Institute archives and re-examine old ideas after years of accumulated proof of work. This is your host, Michael Goldstein, also known as Bitstein, and joining me as always is my co-host, Pierre Rochard. Pierre, how are you doing?
Very well. How are you?
Doing good. We are continuing our journey through the S&I mempool crash course, and last time we discussed Bitcoin being the best unit of account, and in fact, always having been the best unit of account for the people who chose to use it as such. And today we're kind of continuing along that theme. This also goes a little bit along with the volatility theme that we discussed earlier. But basically we're trying to get into more of these concepts of store of value, unit of account, and medium of exchange. And I actually have, I think what are good, Austrian fundamentals of these words, but these are words that get thrown around in the Bitcoin community a lot. And I mean, not even just the Bitcoin community, just sort of any discussion of money kind of goes around these words, and I think they're used in some ways are sloppier than others. And we'll see how Daniel is describing this in 2015. But I think there's clarifications we can make that kind of help bring all of these concepts into proper view, and that this article will be a good foundation for kind of like a good springboard for that kind of discussion. So.
Yeah, it's interesting. I was listening to an Odd Lots podcast with Joe Weisenthal, and he had on like the most mainstream monetary economists imaginable, right? They work for like the Bank of International Settlements and for universities. And they themselves were grappling with the difficulty of defining these three terms. And I thought it was interesting that, our, let's call it revisionism over kind of the layperson's understanding of them it's not just us trying to redefine words. It's really that these are very nebulous from a monetary economics perspective. So it's good that we're digging into it.
Yeah, that's also interesting to think. Usually a lot of the revisionism that we have, the sort of heterodox opinions, are pushing back against sort of established dogma. But in some sense, what you're describing is even this, it's so nebulous that not even the mainstream has a coherent message. So if anything, insofar as we're adding any value, we're actually hopefully helping to clarify these things and remove the nebulous nature for everyone. And through that, hopefully people can also see why Bitcoin in particular is so great on these fronts. So we're looking at this article, Bitcoin as a Store of Value, Unit of Account, and Medium of Exchange by Daniel Krawisz. This came out in the beginning of 2015, so January 12th, 2015. This was really getting into the sort of bear market, a very prolonged bear market that happened after that 2014 bubble. And yeah, Bitcoin hovered around $250 for quite some time. And it kind of, it drove many people mad. This was the time that the sort of so-called block size wars really kicked up steam following 2015 through 2017 was when a lot of that heated up and culminated in, fork and all sort of splits. But also, that happened in conjunction with the macro trends of Bitcoin going into another hype cycle. So kind of interesting point of time, and this is sort of the beginning of that bear market. So there was lots that had not even really been on the forefronts of people's minds. We're not going to be getting into that quite yet. There's some future articles that touch on forks and everything, but just to give the historical context, this is the beginning of that rather long and brutal bear market that a lot of Bitcoiners endured. So Some recent mumblings on CoinDesk on the idea of a cryptocurrency whose value is stabilized with a built-in prescription that manages its supply provoked me to write this article on why this is a vain dream. There is a common fallacy which says that price stability is required in order for a currency to function as a form of money. The way people use terms like store of value and unit of account presumes stability. However, I will show that in an unstable world, a stable currency is counterproductive, and furthermore, that an unstable currency serves the traditional purposes of money, to the extent that they can be meaningfully defined in unstable conditions. First of all, it is impossible long-term to expect an algorithm to maintain the stability of a currency. There will always be money to be made by predicting the algorithm's future effect on supply, and once people have learned to do so, then the algorithm necessarily ceases to achieve its desired results. For someone who gains by anticipating such an algorithm is not producing something valuable that other people want to buy, so he must be gaining off of other investors who are losing. That means other people holding the currency, which means that the currency cannot possibly be stable. Either it is dropping in price or the supply is rapidly declining. The outcome would depend on the details of the prescription. This can continue until the market cap of the currency goes to zero. In order to succeed at manipulating the price to keep it stable, the prescription must never allow traders to adapt to it. It must continually be smarter than everyone else. This is not something anyone can reliably guarantee, especially a Bitcoin startup, if history is any guide. This is the same reason that attempts to create crypto equities that track the price of gold or dollars or other things through protocols like ProtoShares and Mastercoins won't work. It is also why the Federal Reserve is traditionally so secretive, why the chairman tries to talk without saying anything, and why his or her every move is so deeply scrutinized. I would like to point out, I think that he's describing speculators which kind of bring economic reality to the forefront faster. That's part of, they aid in the price discovery. But I think even prior to that, and I think he's going to say this, but reality itself is not stable. So, you simply can't live in a world of certainty. And as we've described in previous podcasts, it is the very fact that there is uncertainty. That's why we have money at all. Stability is about as real as the fountain of youth, love potions, or perpetual motion machines. It is not to be found anywhere in the universe, but for some reason people act as if such a thing could somehow exist. Prices reflect the availabilities of things that we actually can have, so maybe we should all stop searching for chimera of stability and accept that if the world is unstable, then prices ought to be stable too. Otherwise, prices could not serve the function of enabling people to coordinate the allocation of scarce resources. Right now, the world is deciding whether it wants to be Bitcoin to be its money. That's kind of a big change, and it's pretty reasonable that Bitcoin would be volatile. Will Bitcoin take over, or will it drop to nothing? Fundamentally, we don't know, and the rapid changes in Bitcoin's price reflect the confusion and self-doubt in the minds of real people trading it. And this is exactly what they should be doing, because without price signals, there could be no Bitcoin adoption. Bitcoin's exponential growth is a very strong signal, and if Bitcoin were stable, there would be no such signal. There would be no dedicated community of enthusiasts because no one would have any particular reason to want it to be adopted other than the company issuing it. And that company could not offer any value with its stable currency because it cannot unilaterally create liquidity, which is the fundamental thing that makes a currency useful. And I agree. It's a very strong signal. It's kind of insane for people to imagine that Bitcoin should be stable now, because what they're really saying is that Bitcoin has already found its equilibrium. But if Bitcoin has found its equilibrium here, is like, what actually is the use value? And in some sense, this kind of shows the people who often get mad at these things. I mean, they typically are anti-Bitcoiners, and it just goes to show it's like they don't see how like money operates itself and how Bitcoin might fit into that. So they don't see any use value. So it's hard to imagine Bitcoin going up from here. And so they just assume that it ought to be already finding its equilibrium.
Yeah, it's funny. I was having a conversation with someone recently where I was telling him, like, yeah, I think the Bitcoin price is going to keep going up this year. It might hit like 125, and then maybe at the top, maybe it'll get to like 250 later this year. And he was outraged because he was like, how do you know that? Why do you think that? It could, to him, it was like, if that was true, then it would go up today. And, it was a really interesting conversation. And I think that, and my reply was that, well, look, if what I'm saying was true, that Bitcoin's actually the best money, then on day zero, the market cap should have been $100 trillion. And that is essentially, efficient markets hypothesis. If the information was all open source on day zero and everybody should have rationally come to this conclusion, then, yeah, I agree. There shouldn't be a monetization path. It should just start where it will end up. And even if you want to attach some interest rate discount to that future, but that's not reality. And so I thought it was a really, reading this, I'm reminded of that kind of conversation of, if everyone was rational, Bitcoin would be worth, each Bitcoin would be worth $100 million today.
Yeah, and I mean, with Bitcoin itself, I don't know how it could have possibly been more open source at the beginning. Obviously, there was a limit to what people's understanding of it was at the time, although that kind of makes the point, which is it takes time for information to move around. So it's like, I personally think the efficient market hypothesis is just, it's very hand wavy when it comes to sort of the realities of information flows and how long it takes for information to actually get to people. And not only that, but once it gets to people, they have to actually learn it and understand it and act on it. And for even the people who do understand, you have plenty of Bitcoiners out there who they totally get it, and that makes them so exuberant that they even then want to try to find ways to sort of beat the Bitcoin market. So just, beat what they can do from just stacking sats and hodling, which in turn can lead them to, some win, some lose. But it's a very inefficient market in that sense. And I think Bitcoin shows that in the best way because of the fact of how open it was from the very beginning. Everything has been there, and everything since has just been us using our monkey brains trying to make sense of this thing that was placed before us.
Yeah, I was also listening to Nick Bhatia talk. He teaches a university course about Bitcoin, and he was saying that, let's say like almost all of the students, they attend all the classes, they learn the material, they take the exam, they pass the course. Only maybe 10% of them like become obsessed with Bitcoin and like realize how important it is. And so it's like you can lock people in a room and give them the perfect information, which I think Nick is doing, and yet still that doesn't mean that they all 100% of them come out orange pilled. And even, if we look at, like, I think you could argue that Hal Finney really got it, right? That
yes.
He was like, oh, okay, it's, here's what's going to happen.
Is this like his first response? It's like, oh, this could go to $10 million.
Yeah. And so and everyone else was skeptical about it. And so everyone can have access to the same information and come to radically different conclusions about where this is going. I find it fascinating, almost from a sociological perspective. The entrepreneurial error is the default, and the correctly understanding Bitcoin is in the minority.
Yes, and this actually reminds me. There was an interesting bit in Guido Holzmann's Abundance, Generosity in the State, where he was talking about profit and loss, and he talks about how entrepreneurial error can be sort of have a gratuitous effect for other people. So, for instance, in San Francisco, it's a very good place to get cheap office equipment because there's a bunch of startups that fail, and so they just need to liquidate all of their Herman Miller chairs and nice computer monitors and everything from their offices, and so others can benefit from the fact that they made some entrepreneurial errors, as well as actually also learning is like, oh, maybe that's not quite the right business model, or is not the right business model at the right time, or they missed something. There's always all these learning opportunities from entrepreneurial errors. But then he also talked about profit, and in the general discussion about profit and loss, like the people who make profit, there's very much a sort of I'm just going to call it a Randian position, because I just think of Ayn Rand with this sort of mentality, which is capitalism separates the rich from the poor, the smart from the dumb, or something like that. So it's like these are my profits. I did the work and I deserve it, and all that kind of a mentality. It's like a very it's from her. What was that? Yeah. And I think she even uses words like that in a positive sense. But he offered a different way, which I think is so applicable to Bitcoiners, which is, the reason that you profit in an economy is not merely your own actions, but also it's based on all of the actions of others. The fact that everyone else failed to act in a particular way, because had they done that, there wouldn't have been a profit opportunity for a given thing, because it would have already just been solved, like in a sort of general equilibrium sense. And so Bitcoin is sort of similar. It's like when you do profit, and we'll talk about my article, Everyone's a Scammer, later on. But when you profit, I mean, it's almost like insane that if you have this information, you show up and it's like, wait, you're gonna like literally hand me actual Bitcoin for these pieces of paper? It makes no sense to that, but everyone else is sort of making those entrepreneurial errors, and we benefit from it because the information just really is in such a strong asymmetry. And I thought that was such an interesting point about profit and loss. It's certainly one that adds a lot of humility, where you do hard work, and wow, I was able to stack whatever sats, but at the same time there's the humility of knowing is like, well, you're also like, you're not necessarily a genius. Like, other people just did not quite catch on to this in the same way at the same time, and you sort of lucked out to live in a world where everyone did not immediately recognize this. And so it's a good thing to think on, to sort of remind you of that humility. But the other side of this, to get back with the signals, is this is what's going on in the marketplace. Even like just all these people trying to figure out what the heck is going on. Some people are going to buy and they're not even going to see the long term, and so it only goes up a little bit, and they're going to sell at a higher price, and so the price is obviously at the margin is going to go down in those instances, and so on and so forth. There's just a global economy of people trying to make sense of this thing. Of course, it's going to be this volatile thing. And so the fact that within that context, you have all of this crazy volatility of people trying to make sense of this, and on top of that, you have the long-term macroeconomic trend of effectively exponential growth. You can say power law growth or whatever kind of growth, but it's such a strong growth on a log chart that is just. I mean, what is a more bullish signal in all of macroeconomics?
Yep.
So, continuing on, what actually makes for a good store of value? The problem with this term is that it is a terrible metaphor. When we store a physical object, typically we shut it away from other people in another object, like a box or something. But what if I had a box that, like Tinkerbell's magic, only existed if other people believed in it? That's what a store of value is like. Value is not a physically real thing like the box. It is an expectation about how much people want something. The whole idea of storing value is absurd. It's like some kind of dream logic. The only way that a good can, quote, store value is if everyone wants it so badly that it will be snapped up even at a tiny discount. This does not mean that anything can be a good store of value. Everyone could treat, say, plastic poker chips as a good store of value, and they would only behave like one until people realized that they were easy to manufacture. But suppose there were another metal which had similar properties to gold. It was durable, rare, and difficult to extract, and distinctive enough to be difficult to counterfeit. However, the state of our science was such that it was only just being identified by chemists. This new metal would certainly not have a stable value initially upon its discovery, because it would take time for the world to learn about it. But it would be perfectly rational for the chemists who did understand it to buy up as much as they could until the rest of the world had got wind of it. Once this metal's properties were understood by the whole population, then it really could, quote, store value, because everyone else would be using it for the same purpose. And yeah, I think that's this is such an important point that like it is a metaphor. There's no literal storing of value, and this all comes back to the sort of uncertainty aspect of it. Is we don't know what the future is going to hold. We can only have our expectations of the future. And when we say something is a store of value, what we're really saying is that it's a durable good, and one that we have an expectation of the value of it staying the same or going up. Which comes in many ways from its durability.
I think that it's funny when people are like, "Oh, Michael Saylor, he's buying all the Bitcoin. This is a problem." It's like, what? It would be irrational for him not to. This is exactly it right here, and that he has a vehicle to accomplish that. But it's fascinating to everyone had access to this article in 2014.
Yeah, and this is it's a natural part of the process with any kind of like new discovery like this. AI comes out and everyone wants as many GPUs as they can get their hands on, and you have in monetary history and in more recent history. I was just talking to someone about the Hunt brothers, who tried to corner the silver market, and I'm not as familiar with their story as I should be. But what he was arguing that it was they ultimately got ruined by basically regulatory changes with how the markets were handled, which basically helped ruin the fact that they actually got the physical silver, and then regulations changed such that they messed up the market.
But they would have been ruined anyway by the fact that you can just mine more silver.
Yes.
They would have gotten diluted anyway. And so that's, we can scapegoat the regulations, or maybe that was, what it made it accelerate the ruining of their scheme. But ultimately, I think that the reason why cornering the Bitcoin market is going to be sustainable long term is because of the halvings.
Yes, absolutely agree. And I think this is, I guess that's also, why is it that with a store of value, so to speak, you think that the price will not only be the same, but actually probably increase? It's because it's not merely a durable good, because obviously silver is a durable good, but also it does have that high stock to flow. It is scarce, it is difficult to manufacture, it is more difficult to manufacture over time in the case of Bitcoin, to the point where it'll be impossible to manufacture anymore. And because of this, it's not merely durable, but there's fewer of them in relation to all of the goods on the rest of the market. And so the value against those other goods we can actually sustain an expectation that that price would be that way, which would incentivize us to want to use it as a savings vehicle. Whereas if it's merely it's durable, but it's not going to have that scarcity, well, then it's, it'll have, there might be reason why you want to keep it around. If it's a sort of consumer good that you can continually somehow consume over a long time, then, you have that. If it's a durable goods are more likely, capital goods, in which case they're going to be creating some kind of, cash flow for you. Although even then, the value of those that capital is going to go down, very much like what we were talking about on the last episode. And so it's really, money sticks out as the one thing, because it's not a consumer good and it's not a capital good, but it is very durable. A good money is going to be very durable. That's why it gets chosen as a money, and it has that scarcity, and so the price can actually be expected to go up. So metaphorically, we can say that it has this sort of store of value, but what we're really describing is our expectations of being able to use it as a medium of exchange now and in the future.
Yeah. I also think that if we look at the history of Bitcoin, the parabolic price runs, you could say are a decentralized Hunt brothers, right? That everyone's trying to corner the market. And you could argue that it's actually, in the short term, it wasn't the Bitcoin mining supply that undid that. It's that you have people who held, they bought it at $1 and they're like, oh, now it's $10,000. So you have the OG supply come onto the market that ultimately floods the market because, they're rebalancing or whatever. Yeah. So it's kind of a balancing act. But if you zoom out over the long term, that's where I think that you see what's obvious.
You also have people who are trying to have expectations on different timelines.
Yeah.
So I'm gonna just continue saying store of value because people now know what I mean by it. So if they're using it as a store of value over a short period of time and they're trying to corner it for the short term, that's not necessarily as sustainable, in part because of what you're describing with sort of the wealth effects. As Bitcoin gets to a certain price, there are going to be people who are ready to get other things out of life than just holding the Bitcoin. And there are dynamics out there, maybe not as big of a thing now, but the mining supply and so on and so forth. There's a lot going on that if you have expectations and they're only for the short term, you are going to maybe corner the market more than you probably should have. And so the price is going to get to a point that is not sustainable because there's not actually the liquidity for it. And insofar as you overestimated what liquidity could be expected at a given time, you have the chance of making that entrepreneurial error. And so you can have these sort of bubbles. But then when you have the people whose time horizon for a store of value has expectations based more on a very long-term period, 10 years, maybe more, maybe a lifetime, maybe 1,000 years, those people can weather a lot more, and because they're not overextending themselves in a sort of more fragile economic state, so that when that volatility occurs, it doesn't bother them at all. In fact, it often opens up even more opportunities for them.
Yep.
Continuing on. Stability occurs to the extent that it can happen at all once everyone has not only learned of the favorable properties of the good, but has learned that everyone else also knows of those properties. If I know that Bitcoin is both scarce and unforgeable, I may still be scared to put my money in it because I may fear that other people won't treat it like a store of value. Furthermore, everyone could think this way at the same time, and the market therefore still behaves fearfully. This is why people must be convinced that everyone else believes in Bitcoin too. People today are both coming to terms with Bitcoin's properties and are confused about how much the rest of the market believes in them. Hence, there is fear and volatility. Nonetheless, Bitcoin cannot be counterfeited, and its supply is not likely to change, no matter what else happens in the future. That is the best that can be done as far as engineering goes, to design something to be a store of value. The rest is up to everyone else, not the engineer. Thus, if Bitcoin is going to succeed, then it's a good store of value. This kind of further confirms what we're saying. I had something and it totally lost my train of thought. Did you have any other thoughts on the stability?
No.
All right, we'll go ahead and continue on, and Logan can get rid of that. Now, what about Bitcoin as a unit of account? Unlike store of value, this is actually a really good term, but unfortunately, people do not take it literally. When people say unit of account, they seem to want something that will reliably measure wealth somehow, or that things can be priced in without having to be constantly updated. But these are just other ways of chasing the siren song of stability. Here too, if the world is changing, then prices should be changing, and one can only imperfectly compare one's wealth at different times. Really, one can only compare different alternatives which would have taken place over the same time. And, there's a big misconception with some of the ways that people describe money. One of them is that it's a sort of measuring stick of value. You'll hear people talk, and I'm sure that I've probably used this myself at times. You'll hear people talk about things like Wittgenstein's ruler, which is like when the ruler that's measuring something itself is changed, then it ceases to be a good measure. And so what people mean by that is when you have something like the dollar, and the dollar itself, $1 is not equal to $1, but 1 BTC is equal to 1 BTC. That is to say that the dollar becomes a smaller piece of the dollar pie over time from debasement, whereas a Bitcoin is always, 1/21 millionth of the total supply, or the total potential supply. That makes it much more useful for being able to sort of measure the value of things. But I think it's important to understand that itself it's a very imperfect metaphor, because money itself is just a good that exists on the market with a free-floating price, just like every other good on the market, whether it's, eggs or cars or houses or, whatever it might be. It's just a particular one that people use in a sort of special way. But in itself, because there is no, stability, there is no true, quote, store of value where there's like these magical properties of being able to have actual value, it's all based on expectations. Likewise, when we use money in this sort of unit, it has more to do with, like we talked about last time, with accounting and being able to just make rational decisions about how to allocate resources at a given moment, and using the profit and loss of that to determine if we are successful. But none of that allocation, anything that you're actually choosing to do entrepreneurially to act on that is based on a world of uncertainty. And it's one where once again, you're dealing with expectations. An entrepreneurial action is you have expectations of people probably having some sort of value in the future. Maybe there's a change in values, or you just want you want to deliver on some value that has not been satisfied yet, and you use those expectations as a judgment to then make an action to try to sort of capitalize on that. And that's all expectations. And when you come back, you can say it's like, oh, well, I made this amount of money, and that tells you were profitable, and it helps you make a judgment about what to do tomorrow. But it doesn't actually say anything about how tomorrow must be, because values can change very quickly and other people can, like we were saying earlier, the profit is often because other people just aren't doing something. But if people also catch on to a way of providing something in the market, the same entrepreneurial action won't necessarily bring you the same amount of money. And that whole time, all of the prices of everything are changing. We even talk about in Bitcoin that the value of Bitcoin goes up. It's sort of deflationary in the sense that the prices of everything else related to Bitcoin is going to go down. So in that case, it's like when you're using Bitcoin as a quote unit of account, or any money as a quote unit of account, you're not using it as a measuring stick so much as a tool to help you make more rational judgment about how to allocate your resources based on your knowledge of what you have, what you can do with it, and also what you think other people in the market will value tomorrow when you're making those actions. Continuing on. Yet there is a worthwhile definition of unit of account under these circumstances. It is very simple. A unit of account is something such that to gain it is considered to be profit, and to lose it is considered to be loss. Anything can serve this function, but the reason we would especially want to use liquid goods as a unit of account is that when we are liquid, we don't have to think too far into the future. Thus, acquiring a liquid good serves as a reasonable endpoint to any venture. When you're sitting on a huge pile of cash, you know that you'll be fine for some time, no matter what happens. Whereas if we were on a barter system with no highly liquid goods around, then one would have to think much further ahead in order to assess the success of a venture. Thus, thinking of profits and losses in terms of gaining or losing a liquid good is essential to being able to divide the entire future into manageable tasks. As long as one is gaining that liquid good, one is doing things correctly. Of course, when things are changing so much that the money good itself might shift, then one has to pick which medium of account to use. So once again, Bitcoin is a great unit of account if it's going to win. In that case, everyone should be trying to get as much as possible of it right now, with the expectation of it being very liquid in the future. So this kind of, adds to that. And I think what's interesting, so he's saying that, when you have cash, you don't have to think as far into the future, whereas in a barter economy, you do have to plan ahead. And the sort of irony, perhaps you could say, of that is when you have such a highly liquid, sound money that can be used for this, what that also means is you can do actual long-term economic planning and with more certainty that you're going to have the resources you need to get through those times. Whereas in such barter economy where you're having to always think, 10 steps ahead about, the future, you're actually living in a world of even more uncertainty and fewer ways to plan ahead in a sort of real sense. And so you actually have a lower time preference when you're able to have something that you can just take a rest because of its ability to get you through the instability of life versus always having to be worried about sort of present instability. Finally, what about Bitcoin as a medium of exchange? I don't think this function of Bitcoin is controversial. Of course, Bitcoin is a good medium of exchange. My problem with this function of money is the way people treat it in relation to the others. People sometimes think that the medium of exchange should be the primary function of money, as opposed to using it as a store of value. For example, this is an assumption behind Tim Swanson's concern trolling about Bitcoin hoarding. However, it is impossible for a good to function as a medium of exchange unless there is already demand for it as a store of value. If I'm going to give someone Bitcoins in exchange for something, there has to be someone somewhere who wants Bitcoins. And he has to want to store them, even if only for a short time, because if everyone tried to spend their Bitcoins immediately, that would drive the price down to zero. Furthermore, the more that people want to store Bitcoins and the higher goes its value, the more liquid Bitcoins consequently becomes and the more trade they enable. And I would point out here, I think that Daniel is using medium of exchange in a way that I think everyone would be better suited to use. Maybe the phrase, method of payment or something of the sort. We've discussed this previously, but I think it's apt to bring it up again here. Actually, medium of exchange is indeed the primary function of money, but medium of exchange is a term that people use to mean the actual sort of acting of going and buying a coffee with it. That's when you're using something as a medium of exchange, the actual spending of it. The sort of trade is coming to fruition or fulfillment, but the actual sort of praxeological way, I would say, of looking at medium of exchange is that a medium of exchange, something is a medium of exchange when you choose to acquire it for the purposes of indirect exchange, rather than when you spend it, which means you no longer have a need for a good for the purposes of indirect exchange because you've fulfilled that need. And so medium of exchange is based on that acquisition rather than the letting go of it. And so using it as a method of payment, that can be the fulfillment. You successfully, you had it on hand, so now you can get what you need with it, and that's a great thing. But at the same time, medium of exchange as a concept comes from just acquiring it. And when you acquire it, you can choose to use it in many different ways. Basically, you can hold it or you can spend it. And store of value is, in a sense, it is not a primary function of Bitcoin or money, rather. It is a metaphor that describes an extension of what it means to acquire a medium of exchange. So it's saying that I'm acquiring this good not just because I'm going to walk over to the other side of a bazaar to now get the other good that I had wanted, and I just had to trade with this guy first to get that thing and go over there. But now you're able to think, because a good is liquid enough and because it has the durability and the scarcity, et cetera, you can now think long term with it, and you can think, I'm going to acquire this medium of exchange potentially for exchanges that are going to happen deep into the future. And I have certain expectations about the price of said good and how much people are going to value it, that if I wait while holding it, this could actually I could acquire way more goods with it in the future. And so I'm going to, quote, store my value with it. Once again, this is based on long-term expectations. So store of value is medium of exchange over a longer period of time. And method of payment is more of simply the method by which you disacquire your medium of exchange.
Yeah, I agree with that.
Yes. And then unit of account, then I would put as, it's as you're deciding about your medium of exchange, how do you decide you've made good decisions with that? And which one allows for sort of rational economic planning that you would expect to lead to the best economic future? Finishing off, thus, Bitcoin is the kind of money that works in an unstable world, which is the only kind that we know of, and it is a good store of value, unit of account, and medium of exchange, to the extent that these terms make sense amid great uncertainty. When people say Bitcoin isn't a good store of value or unit of account, what they really mean is Bitcoin isn't being adopted yet, which is not a valid complaint. Bitcoin has the right properties for the world's money, and the more the world comes to terms with this, the more stable it will become. And I actually don't know just how stable we can actually expect Bitcoin to become, and I don't know that in some way matters. I think the market will figure that out. What the right sort of stability is, but I do think over time, as Bitcoin has more liquidity, different types of trade are not going to have the same impact on the Bitcoin price. And so more and more different kinds of trade contracts will be able to be eaten up by Bitcoin over time, to the point where, people can use it in day-to-day use and not feel like they're, losing value that they didn't want to lose. And I think in some sense, this is why when people say, Bitcoin is a store of value first, I think it's like, well, the best expectations we can have concerning, the liquidity, the market trying to figure it out, et cetera, is in this most like long-term position, just like this big bet that sometime in the future, I think this thing is going to win. And then over time, as Bitcoin actually does start to win and gain liquidity, that sort of brings that window down of the different kinds of things that people feel comfortable doing with it. And some of the reasons perhaps that Bitcoin was very excited, people were excited about it as a medium of exchange in the beginning, method of payment in the beginning. I'm myself using these terms in that way. But why they were excited is, one, they could already see the future and they wanted to bring it to the now. And also at the present, then things were, kind of cheap and new and so on, that you could kind of get away with that stuff. But as it's gaining liquidity, people have started to, I think this is why the savings narrative has gotten a stronghold, because it is that sort of first sort of primary vision of Bitcoin that one can really stake ground on. Whereas being able to use it in payments is something that is dependent on that and will come kind of over time, because it's used more of as a store of value for long-term savings. The liquidity goes up, and that enables then more of these. But if only once it's got into that certain liquidity does it develop a sort of the volatility or whatever that makes people comfortable with a particular use of it, either because they're worried that they're going to spend and then lose some value, or it's just, they want to hold because they see what the long term can bring.
Yeah, I think that overall, like the key insight I take away from this is that when people talk about, long term Bitcoin will be a good unit of account, well, that means that you should adopt it as a unit of account today.
Yes, I think that's a great point. And I also think, the idea of having it as that long-term store of value is like, okay, well, between now and then, we can already, we have seen volatility. We can expect volatility because of this problem of people trying to just figure it out, and the whole market's trying to figure it out and develop the infrastructure needed to bring in that kind of liquidity, whether it's infrastructure in terms of human capital, just people's education, or actual financial rails that need to exist to allow certain kinds of trades to be happening. During that time period where it's very volatile, there's also this issue of, well, how do you deal with the volatility? Well, the best way to deal with that volatility is to just have more sats. And so you have to also have determined that long-term use of a store of value. And as you've done that, you actually make it sooner that you might be able to start to handle various forms of volatility in more short-term trading, because you've done sort of, call it like self-insurance or something to handle the price risks.
Yep, agree.
Awesome. So yeah, I guess these terms have done a lot to trip people up. Store of value, people have I think from the skeptic side, people have used it too literally to mean it needs to be absolutely stable. So Bitcoin doesn't look like a good store of value if it's very volatile, even if it's going up in value over the long run, because their use of that term implies a stability that simply cannot exist in the real world. Unit of account has been mistaken as a sort of way to measure things and so on and so forth, as opposed to what we've said here, how it's already become a good way to measure your profits and losses. And medium of exchange itself, and I think even unfortunately in this article, has been misconstrued specifically as a method of payment. And so the using it as a method of payment is something we very much expect, almost like we've almost been too excited about that in the past. Some of the other articles we read, we had an expectation that everyone would just be using it for payments all the time very early on. But the actual concept of a medium of exchange includes that actual trade, because it is being used as a medium of exchange. When you use it as a method of payment and you're actually trading Bitcoins with someone, that other person is acquiring Bitcoins as a way to engage in indirect, like acquiring it for the purposes of their own indirect exchange. But it is sort of subsequent to the actual underlying, definition of medium of exchange, which is merely a good acquired for the purposes of indirect exchange, which itself does not necessitate that you actually give up the coins or go spend them within a particular time period, but rather you might have reasons to be looking well into the future and using it as a, quote, store of value because of those expectations. So I think a sort of personal takeaway as well is just to, instead of thinking about things in a very, shall we say, quantitative and static universe, be thinking more from the human perspective in a dynamic economy where these things are about managing expectations. And we seek the goods that are most useful for being able to manage those expectations now and in the future. All right. Well, thank you for listening to The Reorg. This podcast is brought to you by the Satoshi Nakamoto Institute, dedicated to advancing and preserving Bitcoin knowledge. Our mission is to deepen understanding and appreciation of Bitcoin, not just for today, but for generations to come, by creating enduring educational resources and generational knowledge for generational wealth. If you enjoyed the show, please support our work by sharing links, deepening your own Bitcoin knowledge by exploring and studying the SNI archives, and contributing sats. As a 501c3 nonprofit, we rely entirely on supporters like you. Whether you can give a few Satoshis or a few thousand Bitcoins, your contributions enable us to continue educating current and future Bitcoiners worldwide.